Hello, fellow investor. This is Mr. Money Mind channel. Welcome to my channel. And on this channel, we talk about money, investing, and anything related to your finance, just to make sure that you are aware of what's going on in the market on a daily basis, and also how to generate your money. And we talk a lot about cover call ETF and different type of investment that will generate you that cash flow, cash flow that's gonna increase and grow your money. So today we're going to cover the this ETF right here. It's called HDIF. So we'll talk about it. We'll see what it is, what's the structure of it, how much they pay, and how they pay. And we're going to see the sector that they invest. Just in the little notes, don't confuse HDIF versus the other cover call ETF that I already talked about, which is HDIF, which V in the end here. So that's the difference. And if you're interested, actually, I'm going to make a video to compare between these two, and you're gonna see which one is gonna be best for you. But for today, I'm just going to talk specifically on this ETF particular. So the ticker symbol here is this is overview. We start with overview. HDIF, and currency is Canadian hedged because there's some US equity in it, and they hedge to your Canadian dollars. NAV, net asset value, is about 814, and the price is 815. So it's pretty much it's a pretty much equal, which is good. And net asset under management, so how much the fund has accumulated up so far, is about 250 million. 250 million. And active, the style, of course, is active. Current yield is 10.42. Distribution is about 708 cents. Distribution frequency is monthly, and the holding is about 6 holdings. So let's go overview here. Investment objective. So a Harvest Diversified Monthly Income offer a portfolio of equally weighted Harvest ETF positions to deliver steady monthly income. The multi-sector portfolio is comprised of large global companies diversified across key sectors: healthcare, global brand, technology, utility, and US banks. The ETF is designed to provide consistent monthly income stream with opportunity for growth. The portfolio is reconstituted and rebalanced at minimum quarterly. So every quarter they rebalance portfolio. The portfolio to make them, because they say it's equal weight, so they're gonna make sure they're equal. To generate an enhanced monthly income, distribution yield, an active cover call strategy is applied of up to 33% of the equity that's holding in the portfolio. So of course they're not doing all of it, but they're just doing about 33% of that, which is a pretty good. I like that strategy. Benefit: why should you invest in this ETF? So the benefit they put right here, the benefits of investing in HDIF is one-stop diversified core monthly income solution. So instead of having like a 10, 20, or a bunch of covered call ETF, you can just have this one that covers all the sectors. Of course, bank, we've seen it. Access to leading large cap companies diversify across sectors and geographies. Geographies meaning in different countries, which is you have US and also has a global. And of course, Canada. Exposure to powerful long-term growth trends. Consistent income yield of 8% target. So right now we've seen is more than 10%, but the target based on the price, the original price, about 850 at the minimum, right? But of course, as the price goes down, the yield increases. That's why we have that 10% right now. Modest leverage anticipated at an initial of 1.25x to enhance income. So that's a number of how much in 1.25, one and a quarter. For leverage that we've seen here, how much they do leverage, or when it comes to covered call strategies. Of course, covered call strategy to enhance income potential and lower volatility. As you know, the covered call ETF usually have that potential of has lower volatility than the regular S&P 500, zero management fees. But you have to understand here, zero management fee. HDIF itself, there's no fee on it, but the underlying those 6 covered call, there is fee on those 6. So you're going to pay underlying fee, but all in all is less than, 7.75%. So it's very little. ETF fact, we'll see the code here is HDIF, and that's a TSX or Toronto Stock Exchange. Currency is Canadian, but it's Canadian hedged. So your money is protected against the fluctuation of the exchange. That's a hedge. That's what it does mean. Inception, when it was created, this fund was created on February 4th, 2022, and number of holding there 6. Management style is active with covered call. Eligible for RSP, TFSA, RESP, all type of course, accounts. You can use that. Management fee, as we say, is 0. Rating, risk is a medium. So it's pretty much like S&P 500. Last distribution was 7.08 cents. Last recorded was 30/12. So December 30th, 2022. Cash distribution since inception is about $7.8. Distribution frequencies monthly, we've said. Distribution method, cash or drip. So you can either go on a drip program, or you can just get cash and use it, or reinvest your cash. So we go to a little bit of distribution. We've seen it already. We can look at the distribution a little bit here, before we go further. You can see this is a history of their distribution. They've been paying that. See, 7778 since they started. It's been consistent, paid the same amount. There's no cut, there's nothing, there's no reduction. It's a pretty good, and it's monthly. Let's go to portfolio now. We need to see what they have in stock for us. So sector allocation, they have financial at 30%, healthcare at 24%, information technology at 22%, utilities at 13.8%, communication services at 12%, energy is 10%, consumer discretion is at 2%, industrial is at 2%, consumer staple is at 2%, real estate is at 1.4. So the biggest is financial, healthcare, information technology, which is a tech sector, and which is right now is down. And we have utility also, which is more stable. Steady Eddie is at 13%, and communication service, which also kind of have link a little bit with technology, is about 12%. Energy is about 10%. So I really like the combination of their sector diversification. Is a pretty well diversified. I like it. When you come to holding, they say they have 6 holdings. So which are those 6 holdings? We have HHL, HUTL, HLIF, HUBL, HBF, and HTA, which is healthcare leader, right? Which is at 22. We can see Harvest Equal Weight Global Utility is at 20. Harvest Canadian Equity Income Leaders, it's at 20%. They all diversify. This one is actually Canadian Equity Income Leaders. This diversified, has different sectors, where this one is just utility and this one is just healthcare. So they put here on a sector where what they actually ETF invest in. Harvest Brand Leaders Plus Income, which is diversified, is at 20%. Harvest Tech Achiever Growth and Income is about 19%, which is technology. All of these are Canadian, and of course they're underlying, of course, US companies in global with different currency, and that's why your money is being hedged. So you're going to pay the fee under these ones, but overall you hedge. You're not going to pay as much overall, because they're all being aggregated and combined together. So that's it. There you have it. This is HDIF. So what do you think about this? Do you like cover call ETF, and do you like the yield is 10%, or do you want to go to another type of cover call that we cover on this channel? And if you're interested, just let me know if you want me to make to rematch or to match HDIF versus HDIF, and you see which one is going to be great for you to invest your money. So there you have it. If you have any question, and if it's your first time, if you have any question, just make sure you leave down below and or comment. If it's your first time, just make sure you subscribe, and I would appreciate if you give the thumb up so our video can be shared and can be viewed more. Thank you very much for watching. Till we meet again. Bye bye.